CR Wireless today.
Sorry, one more time.
Okay. Jeff, can you walk us through the cash flows and net operating losses that SBA shows on their quarterly financials?
Sure, Jeff. It's a bit of an interesting dichotomy there between what we show on our reported results and what really drives the investor's interest in our company, which is cash flows. We have shown historically losses for GAAP purposes and what we would report on our financial statements, yet at the same time we're showing large and growing cash flows and cash flows per share. And the primary reason that we're doing that is all about non-cash depreciation and amortization. When you buy towers, it's a very capital intensive business, requires a lot of capital, which is put up on the balance sheet as an asset and then depreciated over 15 years. In reality, what we have seen is that our true cash needs of maintaining and keeping the portfolio, up to quality for future tenants is less than what we're permitted to depreciate the tower at over its life for GAAP purposes. So what you have are large non-cash charges, which are not really reflected in the cash expenditures that we truly, in reality, have to make to keep the portfolio up. So you have a situation where, for tax purposes and for financial reporting purposes, you have these large depreciation expenses, which for us has kept profits and really no profits, but at a loss position, yet has allowed us to continue to post ever-increasing cash flows per share, which has driven the value that we've created for our shareholders. Now, you will reach a point, and we're going to be coming to that point in the next several years, where we have fully depreciated our assets. So you won't have the same magnitude of depreciation expense. With a reduced expense, all your other revenues that show up on your financial statements and for tax purposes will cause us to turn a profit for both tax and book purposes. At that point in time, on the tax side, we will have accumulated, well over $1 billion in NOLs that we will use to defer and diffuse our tax obligations. And at some point prior to the time those NOLs would run out and we would start to pay material federal taxes at the corporate level, I certainly expect and imagine that we'll be electing real estate investment trust status, which is a tax election that causes no federal taxation at the corporate level, provided that you distribute out a certain percentage of your taxable net income to your shareholders. So we basically have three stages of life from a taxation perspective. We're still in the first stage, which is generating taxable losses because of our depreciation expense. The next stage will be to begin to generate taxable income, but have that shielded because of the use of your net operating losses. And then the final stage would be election as a real estate investment trust.
Thank you.